Raul, we've managed to hold ourselves back for 12 minutes from talking about what's happening in Bitcoin in the crypto space. Obviously, Bitcoin futures linked ETF seems as though it will not be blocked by SEC. What are your thoughts on this, and what's its significance for this space?
Look, it's very good on some level because it gives people access to the space that couldn't get access before or were felt uncomfortable with custodying their own coins. And so that opens it up for the RAAs and all sorts of others. So the amount of investment inflow, I mean, I've been flagging this for ages. We knew it was coming. We knew it was coming about now. It's actually come about 3 weeks earlier than I thought it would, but it's here and the flows haven't started yet. But let's talk a little bit about the construction of this thing. This is a futures contract. So why does that matter? Well, the SEC like it because futures are regulated and it's on the CME and it's cleared so you don't have the custody problem. But one of the movements behind crypto was this self-custody, the ability to take control and get rid of middlemen. What the SEC has actually done is create a product that will deviate from the price of Bitcoin because of the futures contract. So it will trade at a premium in bull markets and a discount in bear markets, just like the GBTC product does. That opens massive opportunities for hedge funds to arbitrage it. So they would buy the Bitcoin and sell the futures contract, and it settles at the correct price. So they make a fortune out of this. Not only that, but the construct of these ETFs also bring in, you or I could just go to an exchange and buy Bitcoin, right? We're paying the exchange a little bit of money. That's it. Done. We self-custodied it. Nobody else involved. This vehicle means that the arbitrageurs take their slice. The ETF provider takes their slice. The lawyer who set up the fund takes their slice. The administrator, the auditor. I mean, everybody is taking a slice out of your pie. And we've seen this with stuff like the USO contract, the oil one. The futures then trade at massive contangos. And all that happens is you don't get the performance. And everyone says, well, Bitcoin's up 300%, and how come it only made 100%? Yeah, because you've been screwed. If the SEC really cared about looking after investors, they wouldn't allow these futures contract versions. I understand for commodities it's useful, particularly with agricultural commodities, because you can't store them. So a futures contract works, and it's suboptimal is what it is. But there's no excuse for something physical like this. It's just no excuse. And I think they think they're helping the little guy get access and it's safer. What they've actually done is enriched Wall Street's monumental infrastructure all the way through to make money from it again. And it's just not fair.
Yeah. So what's changed? I mean,
nothing. Nothing. I mean, this is the thing is in the end, Wall Street lines its own pockets. It lobbies government to make sure that its pockets are always lined because it is the middleman. I mean, I've talked about this on this show before, is the reason why the securities laws are in place is also because the middlemen are now the gatekeepers. That basically is what the law is. Has to be a security, you have to do it in this way. And what you're doing is adding middlemen. So, you're not allowed to invest directly in a startup because that would be considered a security. You're breaking the law. But lo and behold, if you buy it through your RAA who's got it approved, really? You're just paying everybody fees. And it's being wrapped up as expertise and we're trying to keep you safe. It's nonsense.
And by the way, all of those middlemen always convince themselves that they're adding some value. It's not a malicious conspiracy. They really believe that they are, in fact, adding value.
And they are, I mean, to be truthful, you're adding value because you're giving people access to this market that wouldn't have access before. But it's wildly suboptimal. And that's the issue I've got with it. I still think it's bullish because in the end, the arbitrageurs buy the underlying tokens. So there is real demand. So it's not like fake demand. This is just a derivative. It's not how it works. It works from arbitrage. So in the end, the tokens get bought, taken off chain. So it works.
But again, those contracts have to be rolled. So you can have the potential for negative roll yield that's going to dramatically eat into the performance and would be dramatically uh, outstripped by the underlying in certain market conditions.
And it will definitely happen, and people will be upset. And where's my money gone? Why has my brother made so much money in Bitcoin and I bought the ETF and I've made less? That's a valid question. Futures are very sophisticated things for people to understand. How is that helping retail investors? Because those same retail investors can't buy a futures contract themselves. Oh no, because they need to be accredited investors or have proven the ability to trade futures and options. But fine, if we stick it in an ETF, which is just holding futures contracts, you suffer everything apart from the inability to meet margin.
By the way, Raoul, talking of price, I know you have some charts that you'd like to take a look at on Bitcoin, on Ethereum. These are, to me, we were looking at them offline, off camera earlier. They're really fascinating.
Yeah, look, I have said this recently. I'm incredibly wildly bullish about the space and have been, you know, in the last few months. And I've been saying this point, everything is going about to start breaking out. And we've seen this happen before. We know the pattern. This October, November, December, probably January, February, March is going to be the point where it's almost impossible to lose money by owning anything. It's that point in the risk cycle where maximum risk seeking is coming. And we've had this long period of sideways consolidation, and now we're going to see the fireworks. And I'm going to show you what I mean by the fireworks. So the first chart I'm going to show you is Bitcoin's price versus 2012-13 bull market. I've been using this for over a year, and it's uncanny how it's worked. And that shows you exactly what I'm talking about, that the latter part of the year is a huge run. This tells you it could go up to 250,000 if it repeated the same pattern. I actually think there's an upside potential into next year because of the changing structure of the markets, because institutions tend to allocate at quarter ends. They will have seen the FOMO of this quarter, and many will be looking for the opportunity to invest in the new year, 2022. So hedge funds and institutions will be allocating money in January, and I think it creates a second leg to this, along with the ETF. So that chart is incredible. The other one that's really got my focus, as everybody knows, has been Ethereum. Ethereum's been in this sideways consolidation since May. It's just about to break out of a wedge pattern. These kind of patterns, when they break, tend to be explosive in move. And guess what? Ethereum is exactly following Bitcoin over an extended period of time. We're talking 6 years here of Bitcoin's previous run. So again, it just suggests that Ethereum can get up to 20,000. Again, I actually think it exceeds this, but it just shows you what the back end of the year or going out into March can look like. If you want to see it in regular price terms, it kind of looks like this. That's not on the log chart, which is, again, mind-blowing in terms of performance. And then obviously the bear market steps in after that. The bigger part of this picture is I like to use logarithmic trends with regression channels because it shows you, for these exponential assets, things that are cheap and expensive versus trend. So interestingly enough, the entire crypto market cap, around 2 trillion, is actually 2 standard deviations oversold. Now, this chart is like a few weeks out of date, but it's basically 2 standard deviations oversold. By the peak of a bull market, we tend to get 2 standard deviations overbought. So at 2 trillion, it's likely to get to like March at 10 trillion. So that's the 5x of the entire space, which is kind of interesting. And that makes me very, very bullish on the space overall. So here's another example of one of the tokens that is earlier stage, seeing adoption. This is Solana. I've talked about this a reasonable amount. Solana is seeing adoption. It's very clear. And what's amazing, it's exactly following the Ethereum price from its last bull run. And guess what? The prices are almost identical too. So the left scale and the right scale are almost the same. They're both at roughly $1,000. Sorry, not $1,000. They're both roughly at whatever the price is now, $400, and it looks like there's a hell of a lot of upside. So it's all to play for me. We've gone through the period of consolidation, and the period of consolidation is when the market gathers the power. And we know we've got restricted supply of ETH, all the Bitcoin coming off exchanges. We've got the ETF, we've got ETH 2.0, we've got lots of adoption going on. I couldn't think of a sweeter spot for this. I mean, this is as good an opportunity as we saw in March, April, May, when I started pounding the table and getting irresponsibly long.
Rob, we were talking about this a little bit off camera, this sort of astonishing self-similarity between these patterns. We were talking a little bit about what causes it, talking about adoption curves. Give us a sense of your thinking about adoption curves and this price action we're seeing.
Well, we're not truly sure. Part of it is around Bitcoin's cycle, the halving cycle, seems to be the anchoring of the markets, much like the US Treasury market is the anchoring for the global bond markets. So the Bitcoin halving cycle seems to be the anchoring. And then what we're seeing is, yes, there's a bunch of assets that go up a lot or go down a lot, but the ones that get adoption start looking like each other. And it's weird because it seems that the human psyche plays out as well. Now, there's obviously tax season that does stuff to do with that, whole bunch of stuff, but human psyche seems to play out. The behavioral impact of humans seems to play out in the same way every time. So you have a big run, then everybody gets, well, what happens if this is going to happen? And they start getting nervous. So we have the correction. That correction, then the weaker holders pass it to the stronger holders, and the market starts again. It seems to play out endlessly, and it seems to be where you are on the adoption curve versus the kind of Metcalfe's law idea, and they all seem to trade the same, and it's fascinating.